Peter Rose, Longwood Currency Trading. Coffee and a lesson in staging. I have to apologize for the rest of the video. There's this blue spot in my glasses. I don't know what the what the issue with that is. I'm not a cinematographer. I'm a currency trader. So I think until I figure out what to do with this, you'll have to put up with some of these videos with blue dots in my glasses. Sorry about that, but it's the content of the video that I want you to concentrate on, not my poor filming skills, okay? I thought I would get this video out early. I was going to have another one that I was going to post today, but I thought I would do this one because it's just a series of the last few days that I thought would be interesting for you. You know, in my teaching on this channel, as far as trying to share some of the experiences and things that I've had, I try to direct them toward those traders that are trading four-figure and a low five-figure account, you know, something like that, and they're just not having the success that you think that you should be having or that you need to have, and you're really not sure that you're prepared to trade a larger size account, because when you trade a six-figure account, for example, life is a little different than it is when you're trading you know, two full lots, or even when if you're still working on your techniques down trading mini lots. And so I try to I'm not suggesting that those of you that are in that four and low five-figure account size do some of the things that I talk about, but rather be aware of them so that when you get to the larger lot sizes that you're able to make the transition. You know, I just had a video, or I will be having a video, I'm a little out of sync here as to my videos, as to how you think about staging. What happens when you're doing staging. I've been talking a lot about staging lately because I get so many replies back that people are trying this because they see the people on these videos channels and they talk about this more complex trading, not complex, but more advanced trading techniques, and I consider staging to be one of them, and I consider compounding to be one of them as well, unless you do it the way that I do it. Regardless, this is a view of a recent exercise that I had, or a trade that I've had in staging, and I thought that I would share it with you because it shows the danger of doing it, even for somebody who knows what they're doing. So on Sunday, I sat down with the Sunday Open. I'm here on the East Coast in the United States, so 5 o'clock, boom, the market's open, and I thought I would try my hand at things. I looked. There was the appearance of an opportunity getting ready to happen. I watched it as I did other things, and then it was probably after dinner or something. I don't remember exactly what time it was, but I took a look at the chart, and it really was starting to manifest some good characteristics. So I threw a position on and did some early staging with limit orders, and walked away because I didn't think things were going to happen quite as fast. I mean, when I put my limit orders in, I'm expecting them to hit within the next 15 minutes, half hour. And this thing went off almost immediately, and it went boom, boom, caught my two. I started walking in, boom, hit the third one, and I made $618. Yeah, I was doing it with some size, but that's the way I do it. I do some size, and I'm not looking for a lot of pips, because when I work with folks when they don't have a lot of money, we trade for not a lot of pips, because it's easier to get 5 or 10 pips than it is to try to get 20 or 30 or 40 pips to try to make money. And the idea isn't to make money, the idea is to learn how to trade. And if you're complicating your life by trying to do compounding too early or with too small of a bank, you're going to get yourself in trouble. And even when you have a larger bank, you get yourself in trouble. So that's great. I made the $600 and went to bed, and life is good. So I get up Monday morning, and I'm looking at the chart, and it's looking pretty interesting. So I get in there, and I put a position on, and it wasn't really going the way I wanted it to go. I get out, put another one on, and the same idea. I thought there'd be enough volatility. I could do some quick. It's not really staging. It's a two-part entry. I go in when it's confirmed that I'm in. Then I'll go in a little heavier, which really pulls my average price closer to the current price than I'd really advise having it. But when you're only looking for a few pips, in other words, I might have a 20 pip profit target, so I'll go in light, and then at maybe 8 pips, I'll throw on a big size. Well, that brings my average right up to where the current price is. So if I get a retraction, I got to get out right away because I'm losing against that larger lot size, where you really should be reversing that, which I do at the next stage point, which comes at a later time, and then I go in lightly and then stage from there lightly. So anyway, the position wasn't behaving well enough. It would go a little tiny bit in my favor, and then it'd go out. And because I had that, I think I had a 3 full lot position on, and I was looking to drop another 5 if it went far enough in my direction. It just wasn't doing that. And so, and it was moving. I took a look at the 5-second chart just to see what was happening, and the 5-second chart was starting to creep against me, and I thought, okay, I'm out of here. I hit the close all button, and I lost a little over $100. It was $102, which isn't bad on a 3 full lot, right? But it did, and I said, I'm done here for the day, I think. I came back later and looked at it. Things looked like they had improved, and so I thought, well, maybe I'll take another run at this. And it was getting sort of late in the afternoon. And I usually don't trade afternoon because if the pair countries are going to do any commercial business, it's going to be in the morning when the market's open. And then the latter part of the day by those institutional traders is done by settling up and doing other things and preparing for the next day. Most of the heavy lifting is done early in the trading session. That's why the opening is so popular with most people, because you get a lot of momentum going, but you do get a lot of whiplash because you have a whole bunch of institutional traders. Some of them need to sell that pair and others need to buy, and some are buying more than these are selling, and so you get this struggle at the open. And if you're really good at doing that, there's an old system called the London Open, and that's now not as practical as it used to be, simply because of the change in the markets, because of the communication has increased in the last 10 years as far as getting quotes and acting and and that sort of thing. In any event, I saw an opportunity. I thought, this may not take hold until later in the evening when the Asian session pops on, and so I'll put some limit orders in and we'll see what happens. Well, the first limit order hit. It went on, and it was a large open because I was looking at a breakout situation, and it was relatively large. I think it was a five lot that I went in, and then there was another 5 lot that followed. So I'm 10 into this thing, and because I had doubled the original order, my average price was within pips of the current price, and it went negative on me. And so I'm 10 fulls negative at $100 a pip. And so it doesn't take very many pips against you in order to add up. 4 pips is $400. And so it was going between $1,000 against me and a couple of $100 in my favor. So because I had that waffling going on, the pips weren't very much, but the dollar swing was a lot. So I had to abstract myself away from the dollar value and just say, all right, instead of going in 2 hops with 2 5s, let's just say I went in with one big shot of a 10 full and play it that way. So I can play it by pips and not by what the average price is. You have to change the way that you think if the situations change. And this is the problem, one of the problems with staging. So the thing went thousands and thousands and thousands of dollars against me. In fact, there was a massive spike up. It was about a, let's see, 30, it was about a 30 pip full candle right on against me. And so I'm $3,000 on top of the 3 that I was already behind. I'm at six behind, and I'm starting to say, and you know, this really isn't going in my direction. And then it started to come back. And here's where I made the error. As it came back and went into profit of $1,000, I was $2,000 up. I doubled up and I went to 20 full lots. What happened? Immediately the thing goes against me. Whew. I'm $8,000 underwater. I said, you know what? This is not, this is not doing really well. And we got down later in the day. We got into the evening. We finished up dinner. We're sitting in the living room. Just chatting and having a good time, and my phone goes beep. I go, what's that? And I look at it, and it was the limit order triggered. I said, well, I think I got stopped out in a profit because I didn't have a stop limit because I've got plenty of money that the thing could have continued to go way negative. You get a sense of the trading, you get a sense of where something's going to go, but you don't know when it's going to happen. So I didn't want to lose my position, and I didn't want to lose $8,000 by getting out and then re-entering. So I had a good position. I was happy with it. I'm sitting there after dinner. We're chatting away. My phone goes off. I go in. My limit had kicked, and I made $4,000. So, yeah, it worked out. But look at the loss that you have to take. And when you're staging, and you're incrementally off just a little bit on either where you're staging or what actually is happening to price action at that given time, you could be underwater almost immediately. And if you're just looking at that in terms of pips, if you were an all-in, all-out situation, you can do percentages and evaluate your risk and all that other kind of stuff. But when you're staging, and generally it's when you have more than a couple of stage points, you're entering a stage and maybe 2 more stages, you can't think in terms of pips. You have to think in terms of dollars. And so if you're trying to trade 10 mini lots because you've got enough money in your account to trade 10 minis, but not quite enough maybe to trade the 2 full lots that you're really looking to do, or maybe you just have a 1 full lot and you think you're going to be fancy and you're going to do some staging, but you don't have the experience or the skill to do this stuff. Trust me when I'm telling you this. And if what happened to me happens to you, and you don't have a full grip on what's happening, and you do set a stop because you're not really that confident of where that thing is going to go, and if the best you can do is afford trade mini lots, if you're going to lose 6% of your account, you're not funded well enough to carry that thing much further into the negative because of your margin. You're going to panic and you're going to get out, or you're going to set a stop. And it's very, there's a time that you set a stop limit when you're staging, but it certainly isn't at the entry point. And you certainly shouldn't be staging at the entry point. I tend to stage a couple of hops during the entry analysis phase or during the entry phase of my trade. Once I go into position management, then I let things go for a while, and then I'll continue to stage from there. But and that's really the way you should do it. You shouldn't be staging in the entry stage until you get a lot of experience. Well, look, I've been looking at currency markets since 2007, trading in active accounts since 2012. I think I know what I'm doing. Sometimes I debate that because I take such horrendous losses, floating losses. You don't want to ever have a position where you say, how bad could this get? And that's a dollar value that makes you choke because it's getting close to the end of your dollars. And you would get margined out. You don't want to ever be in that position. You'd be trading too heavy at that point. You have to manage your available funds such that you're trading with a small amount of that or a medium-sized amount of that. So when you lose, you don't lose a lot. And when you win, and it's going in your favor, you've got lots that you can begin to stage in. But it's the process of staging that I'm concerned about. Those of you with the 4-figure and the low 5-figure accounts, that you're going to be trying to do that, and you're really undercapitalized to do it, and you may not have the experience to really understand the danger of where that average position is in relationship to your current price. I did an example. I think I mentioned this in one of the other videos that I did, or maybe one of the ones that are coming up, that I did a scenario where I put all of the, I just put 5 full lots on and carried that to the end of my simulation and got out, and there was a $4,000 profit. And then I did it with staging in 5 lots, opening with 5, and then staging 3 at a time at 8 pip intervals, and then after the last 2, had a retraction of 20 pips and closed the position out. What was the net result? Because I still had 8 or 10 lots that were running, right? And the net value of the position was $1,500. Well, that's great. It was $1,500, but because I did the staging incorrect way, this is a simulation to show what it was doing. I was doing it as an exercise for someone who was asking me about this. I said, you made $1,500. That's great. But you had put in 16 lots in that position. You were 16 lots in, and you made $1,500. So that shows you that if you get the staging wrong, you're not being paid for the risk that you take. I don't know what the value is, but you take $160,000, and it's $10,000 for every lot that I trade, just as that's part of my risk management. So if I had 16 lots out there, that means I've got a $160,000 bank. So I made $1,500, divide that by $160,000. It's not a very good percentage return. The $4,000 on a $50,000 bank is pretty damn good. So you see the difference, that if you really are staging incorrectly, you're not getting full value for the risk that you're taking. So just kind of a cautionary tale for you, because I'm addressing this to those folks out there who are looking to be able to trade a 6-figure account. What do I need to do? What do I need to start thinking about today that I'll need to do when I'm trading that 6-figure account? But you can't be doing it today. I mean, you're going to want to try it. I can't help you with that, because there's a lot of people that appreciate what I'm trying to prepare them for, even though they're trading 1 full lot at that particular time, or 5 minis. If you don't know where you're trying to get to, how are you going to get there safely so that you can do that next stuff? You want to drive a race car, you better know how to drive the family car first and understand what you're trying to learn how to do ultimately, so that you can practice those key skills, so that when you get in a race car, you don't kill yourself or somebody else. And that's pretty terminal in a race car. In the currency markets, it's only money. But if money is all you have and you lose it, it could set you back years and years and years in your development when the early years are those that you want to accumulate as much money as you can so that compounds as you get older. That's what I did in real estate. I bought 4 or 5 properties right away in a 3 or 4 year period of time. And a couple of those I held for 20 years. So that's how you make money. You build a good foundation, and then when I increased in my skill level, I still had those properties, but I had learned from them, so I could go out. I'll bet you I could buy a piece of real estate right now quicker than you can buy a pair of shoes. Yep, because I know what I'm doing. I can make those decisions. But I was only able to do that by learning all that stuff as a solid foundation and not trying to make those decisions then that I wasn't capable of doing because I didn't have that experience. So take what I'm saying as stuff that you're being aware of for your future work at, when you start to trading 5 lots and up, let's say, and look at what you're currently doing. What is your strategy right now? How are you building your rules and all that sort of stuff? I mean, that's the stuff that I cover in my consulting. And I've got it's so structured, it's 500 pages of manuals in order to go through it. It isn't 500 pages of stuff you know, it's the story of how you put these pieces together and get into a certain point. It's not like reading a math book and you have to learn something new every time. Of the 4 manuals, the 4 course books that I have, I'm only teaching one major thing at a time in 3 of those books. In the first one, the foundations part of the course, there's a broad view of it. That's why it's called Foundations. But the next book is Principles. What are the principles of trading? And there's just a few of them, but it's going to take 100 and some odd pages in order to describe that, and the consulting that that would go with something like that. Because I don't sell books, I sell consulting, and you have the manuals to go through and back that up. And then the next one is process-oriented trading. What is a process, and how do you apply the strategic thoughts and stuff that you have into building rules such that the rules are process-oriented and not just rules, static rules. And then the 4th phase of the course is advanced solutions, and that's where I start talking about compounding and staging and all kinds of stuff like that. There's about 6 topics that are covered in there as to how you take all the stuff that you learned before and start applying them into advanced solution sets. And so that stuff is where I'm trying to get those of you that are watching my channel and doing the 4-figure, the low 5-figure stuff, give you the right platform of base. This is where you want to get to. This is your goal. This is where you want to get to. Now, this is how you do what you're supposed to be doing now. This is what you're supposed to be doing when you get up to low to mid 5-figure. And this is how you make the transition between trading 3 full lots to trading 6 fulls to trading 8 fulls to 10s. And I go through that. In fact, I talked a little bit about that in one of my previous videos. You might want to go back and check that out and see how the information that I'm trying to provide for you here is really presented differently in a course than it is in a video, because I'll just pick a topic and talk to you guys about it, like this one about the staging, lesson in staging is out of context of what the flow would be. So if you can learn something from it, if you're trading a 5 or 6 figure account now and you're having some problems, well, you're going to be able to get a lot out of these videos. You don't need to have consulting maybe from me. Although maybe that's even more important, is to make sure you get rejacked and onto the right track. So just, again, the cautionary tale is don't try to do what I'm talking about unless you have all of this background locked down. You don't need me to do it. There's a lot of folks out there that are teaching, and they're very capable of showing you what to do, and they're probably easier to get along with than I am, because remember, I've taught I've taught karate for 50 years, so I don't suffer fools wisely or whiners or complainers. Or this is the nuts. This is the way you do it, and so it's going to be kind of a unique experience for you if you get wrapped up with me. Nonetheless, be very careful about staging too early. And as you're doing these early preparatory things, do a dry run on paper as to what you do, and watch. The takeaway here is watch how staging affects your average price, and you will be amazed. Okay, all right. More coffee, and I'm into my day. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.